Look, the markets may be on this upward track of the crazy 2016 roller coaster with stomach-churning drops, but the state of the overall global economy is still a concern for many investors. But should it be? And how are the institutional investors and the private equity guys reacting to these crazy market moves? Joining me now is one of them. He's managing director of Bain Capital, Steve Pagliuca. Great to have you. Thank you.
Be here.
Well, yeah, it's been nuts. It's been insane.
Absolutely.
Just give me your gut reaction on the market action lately.
Well, actually, I think it's a correction. The S&P was at kind of 90% of the highest levels it's been, and now it's somewhere around 50, but it's going up a little bit today. The great thing about private equity is we don't have to stare at those screens every day because we're building companies for the long term. And I thank my lucky stars every time something like this happens because we can just keep building our companies, and normally these things even out.
Well, private equity in 2015, that was the star. I think there was $600 billion in opportunities and deals. What will 2016 be known for, considering that the landscape has changed? What with China? You know, Russia and Brazil are in recession.
But it's interesting, with those companies, they need capital, and they need to build companies. And so, as you know, our model was built back starting in 1983 to take the consulting skills, bring them into these emerging markets and companies and grow them. We've done that very successfully.
Well, you just closed, I think, your third China fund, $3 billion. So obviously there's interest in China at this price, right?
Absolutely. Our fund is pan-Asian, so that's also a great thing because if things are softer in China, we can invest in Japan, we can invest in India. You know, India's made a lot of gains under Modi, and things are happening there as well. What
is your top rule when deciding whether to invest in or buy a company outright?
It's really the ability, can we transform it to make it be a bigger and better company over the long term? That's the top, number one rule. So we start as a very microeconomic approach, and then we put this overlay, the global overlay. What's the currency risk, what's the country risk, and we'll put a premium on it based upon where we stand on those issues.
So you do look at the country risk. Do you look at political risk? Do you look at economics?
Absolutely.
So what looks too risky right now?
Well, certainly, I would say in general, there's a lot of talk about the stock market, but behind closed doors, the folks in Davos are really talking about a period where there's a lot of global instability. The ISIS threat, the things going on in the Middle East. I think that far outweighs the market issues. And again, I think the market is a correction. China is still growing 6.5%. Jack Ma was talking about it today. It's converting to a services economy. He's adding people. He's adding all sorts of things in that business. So they're pretty bullish inside of China.
Would you touch anything in the Middle East, ex-Israel?
I think it'd be very risky at this point, and I'm hoping the world's going to come together and solve this problem, but it's probably the biggest thing since the Cold War.
Let me just finish by saying this. You guys were brilliant to have invested in Canada Goose. Steve's wearing the Canada Goose jacket here. This is the Arctic level. It's unbelievable.
Yeah, it's certainly tonight. This is one of the coldest offices I've ever had here, and you're hard working out here in the freezing cold.
Yeah,
it's
Charlie
amazing
Gasparino was going to attack you and try and tear that off you, just so you know.
I'm the only warm guy in Dallas. It's not just because I'm Italian.